You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time for the rockinest of option shows, to coin my own adjective. Yes, it's time for the option block. My name is Mark Longo from the old Options Insider Radio Network, as well as, of course, from the OptionsInsider.com. If you haven't been there in a while, head on over. Lots of good stuff, lots of breaking news from the world of options, education, analysis, unusual activity, most actives, hot options reports, all that fun stuff you come to know from us, and a lot more. So head on over there, maybe at your lunch hour, maybe you're just doing your daily trade and you want to check in on some good stuff. The Options. Don't forget theoptionsinsider.com is the place to go. And of course, you can always grab our audio pretty much anywhere on the planet, including iTunes, our app, or via the old Stitchers, or whatever you like to use out there. And of course, you can always join us live Mondays and Thursdays, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlers, MIXLR. So set it and forget it, grab it. If you want to use the app, some people have reported the streaming has been kind of hard for them on their mobile phones because their phone keeps going to sleep. If that's the case for you, maybe don't use the web version, grab the Mixler app and do it that way, and that might be easier for you. Either way, we do hope you join us, and we do hope you guys send us some questions, and a lot of you have. We probably could do a whole Q&A today, probably, if we really wanted to. We shall see what we get up to today, but first, joining me as I spin the old Option Block All-Star Roulette Wheel, it lands upon the trustworthy, the reliable Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show. To you, sir.
Well, thank you for the introduction. I'm going to claim reverse umbrage on you for that one. Very nice.
Reverse umbrage, a.k.a. love. There we go. So someone actually wrote in who talked about umbrage before. He's the guy who took the picture of the umbrage license plate and sent it into the show. Wow, he happened to just write in again today, too. So, yeah, everyone's got umbrage on the brain these days. Or in this case, reverse umbrage, which is nice to hear. Speaking of, save your umbrage, though, I almost called you Rock Lobster. Mr. Uncle Mike, because we are going to be joined by the meatball. He's a bit late, though. So you save your umbrage for him. How about it? As we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the name implies, this is indeed the portion of the show where we break down what was trading, and a lot of things were trading. A lot of things have been trading it up over the past week or 10 days, of course. What a maelstrom, what a roller coaster ride it has been. Big sell-offs, massive explosions in volatility, products getting wiped off the board, allegations of manipulation, all sorts of fun stuff going on in the world of the markets these days. Today, we're seeing a lot of green back on the old screen. Most of the major indices up 1%, if not well over. The S&P and the Dow in the 1% territory. The tech-heavy NASDAQ up about 1.6% actually. So a good day out there in tech land, getting back a lot of the green that they hemorrhaged earlier in the week. Of course, all this green means VIX cash ended up the day flat to slightly unched off a little bit. Still in the teens, back in the old teens. About 19 and a quarter or so out there finishing up the day. A lot of people writing in that we've been waiting for that moment of when the contango would finally rear its ugly or beautiful head, depending on your point of view. Seems like we're finally getting back into that realm. So all of you who've been waiting for that can breathe a sigh of relief. But a lot of interesting stuff lighting it up. Uncle Mike, I guess we'll start with you. What was catching your eye in today's market activity, sir?
Well, this is going to be kind of unique. I don't know if these words have ever been spoken. I know they haven't been by me. Technology and utilities led the market up today. Kind of an odd combination of things to sectors that are leading. I'm just looking at the my stash of symbols on the XLs, and XLU up over 2% today. The utilities, obviously that's not a very large sector of the S&P, but nonetheless, got to give a shout out to the utilities when they deserve it. Up over 2% today. We have technology up just under 2% today. So we have a lot of movement from the utilities and technology. Gotta love it. Financials were kind of a laggard today, only up about 0.5%. And looking at XLF, energy is the one with which we have actually not going higher on the day when oil was going higher. So that's kind of an interesting thing as to what's happening. So we have a lot of things that are happening that don't typically happen in the way with which they normally happen, if that makes any sense. Like when the markets were getting pummeled the last couple of weeks, everything was going down. Usually you get, when things like that happen, you get some type of movement to the upside, maybe in the metals or in the bonds or something along those lines. But for the most part, for the dramatic move that we had to the downside, it seemed like everything was kind of going down. So a lot of unique things happening in the marketplace. Another thing that caught my eye today, Apple. In our triple income portfolio, that we work as a team at RCM. We've been selling puts on that for a long time. And we were short the 175 put going into this month. And I was actually kind of excited. I was thinking we could finally own Apple and I could start selling some calls on it. But 175, we still have a chance, but we're going to be on the borderline tomorrow. We'll see what happens. It's closed at 173, around 172.99 today. So we get another update tomorrow, the puts might go out of the money again. So I was actually kind of hoping that we could actually have the joy of owning Apple again, at least in that portfolio. But there could be worse things that happen as opposed to your short puts going out worthless, to say the least. The other thing that caught my eye today, we have S&P is up 1.2%, and the VIX pretty much didn't move, down 18 cents today. So we did not get a lot of downward movement in the VIX, but yesterday we had a large amount of downward movement in the VIX, which I'm actually looking forward to hearing what the greasy meatball has to say on that one. And that's what's catching my eye today.
Yeah, there's a lot to talk about on the VIX. VIX is obviously top of mind for a lot of people still the evolving kerfuffle, shall we say, over that and the inverse ETPs. I think we'll table that a bit until the meatball's here, because if we talk about it now, he's just going to want to talk about it again anyway. So we'll just save that. But it's interesting. It is kind of funny, actually, because for how long now have you been saying that you didn't really want a lot of Apple in your portfolio? Now the one time that you actually want to put a little bit on, Apple is denying you, sir. How does that make you feel?
They might not be denying me. They might just be. What I'm hoping happens actually is tomorrow Apple closes at like 174.88 or something like that. We get it put to us, and then it gaps up on Monday to like 187. That's my hope with Apple. So jury's still out with Apple. We'll see what they say. We'll see what happens tomorrow.
I want to get into all this VIX whistleblower and all that other. Well, speaking of Apple, by the way, I do have an interesting factoid for you, Mr. Uncle Mike. Maybe this is why you can't get your stock. I was looking at a chart. I think it might have been out of the journal. I forgot who sent this over. But they had an interesting infographic of Apple actually shipping more watches than Switzerland in Q4 of last year. And they have an interesting chart. We'll put it in the show notes, listeners, so you guys could see it. But in the Q4, Apple actually shipped about 8 million watches versus apparently the entire universe of Switch watches, amounting to just shy of 7 million, 6.8 million. So there you go. You know, charts like that, Mr. Uncle Mike, it's not surprising. You can't get yourself some stock.
I know. Maybe I should just buy an Apple Watch.
It feels like 3 or 4 years ago, all of a sudden we're leading with Apple at the top of the show. You know, it feels like old times again. You know, you want to buy some Apple. I'm kind of mocking you. It's fun. You know, this is like old times again. All we're missing is a massive bid in the call skew out in the Apple, and then it'd be like old days again. You know.
Well, that's kind of a big part of what made Apple fun in the old days. So
that was a
we'll
huge
see.
part. Verticals for pennies on the dollar. Those were the good old days. Speaking of the good old days, and we're going to get to some good old times. Actually, a little earlier on the show than normal. I'm going to call a little audible. You're a football guy, Mike. Yeah, you like that. We can go into iBlock, talk about some more Vic stuff right now, but let's mix it up a little bit, because usually on Thursdays we save your strategy block for a little bit later. But I think you were mentioning what you want to talk about today. It might have some interesting stuff, kind of unusual stuff for you, which I think will be kind of fun. So I think maybe without further ado, we'll dive into an upgraded earlier edition of the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
I don't know, Uncle Mike. It's getting to the point where I don't know if I recognize you again. I recognize some aspects, like the old school, wanting to buy Apple. That kind of makes sense to me. But this newfangled Uncle Mike, who's just slinging out of the money calls left, right, and center, just gobbling up out of the money premium. I don't know this guy. So why don't you introduce us to this fellow who just does nothing but buy out of the money calls?
So you're gonna be introduced to another one. My entire career, I've always talked about how I hate buying out of the money options. Not hate, but seldom want to buy out of the money options, and I'm not a fan of legging into spreads. Well, for the last 9 days, I've been legging into out of the money vertical call spreads. What do you think of that, Mark?
I don't know who you are. You are impersonating Uncle Mike, and I shall now hang up on you and continue with your show.
It's something else. So, all right. So let's flash back to February 5th. I went into February 5th in cash. That was the first day of the crazy downturn. I got out. I pretty much went to cash on February 2nd. And my thought was, okay, I'm having a really good year so far, and I just don't want to go into the weekend with a position at this point, because I felt February 2nd, Groundhog Day, we had kind of a down day. I'm like, you know what, let's just kind of reevaluate things on Monday. And I'm referring to my aggressive SPY strategy that I do and I talk about on the show. So Monday, I decided to sell a put spread. I'm like, okay, we have a down day. Let's sell a put spread. Let's get into this. And probably about, I had my risk management in place. I'm like, okay, if this touches my short strike on this vertical put spread, S&P is going to have to go down 40 points basically for this thing to even be touched. I think it's a pretty highly likely, high probability style trade. I feel comfortable with it, but as always, I want to manage the risk on it. So if for some reason it does go down 40 points, well, I'll just get out of it on the spot. And needless to say, about an hour later, I got out of it. So lost a little bit of money on Monday the 5th. Not a lot. I think I sold the spread for 30 cents. I got out at 40 cents, or I got out at 70 cents. So it was a 40-cent loss. Very manageable. Typically, I like to get out when about the time that I lose the intended credit. So that way you can live to trade another day, which we have been. And so Tuesday comes around and I'm thinking, okay, I'm in cash again and still off the heels of the best January of my life. It was a total anomaly of what happened to me in January will likely never happen to me again in terms of the good fortune I had with the trading. So if the market comes up, I want to be a part of it, but I still don't want to risk a lot of money right now because it's just not prudent to do so. So to give you an idea of it, I have roughly $1,500 allocated per contract with this strategy. And I said, okay, I'm going to buy a call option, an April 285 call on SPY. And I paid 60 cents for it. So to give you an idea of how much money I have on the table, I'm thinking, okay, $60 out of $1,500, which is actually more than that because of the success we had in January. It's not a lot of money. I'm putting out roughly 4% of my risk capital at risk. So it's really not a large position, but I wanted to be a part of the market in case it came back, and this is on February 6th. So the market starts going down. I'm thinking, okay, well, this is why you put so little money in case something goes down. But I noticed something. The 287 calls, now remember, I bought the 285 calls. The 287 calls are trading at 57 cents, and my 285 calls are trading at like 73 cents, meaning that Vega is beating Delta. Volatility is going higher, and it's going higher to the point to where I am actually wrong on direction, but was right on volatility and it wasn't even my intention. So I'm like, okay, well, let's do this then. It wasn't my plan. I'm like, okay, I'm going to just sell a 287 call. Because if this market does start to rally back to these levels where I would actually take any real profits on these trades, I believe Vol's going to come down. So the market's given me a gimme. So I put out the limit order to sell it, the 287 call at 60 cents. Now, it didn't fill right away. It just kind of hovered at like 58 cents for a while. And eventually, later in the day, the market did rally, and I ended up getting filled at 60 cents. So I'm like, okay, I have a single position in the 285, 287 call spread at a zero cost basis. Now, what I learned from that, and I have never really looked for this in the past, is that the day after you have a crazy downturn when the Dow has a 1,600 point range and the S&P has a 100 point range, when you have a lot of craziness, the day after, and I know this isn't really going to sound shocking to people, but the day after, a lot of crazy things happen in the volatility world, meaning that volatility can move at such a rate that legging into spreads at very small amounts of risk, you have the possibility of that happening. So that's something that I learned on February 6th. So I said to myself, okay, if a day like that ever happens again, then I'm going to be doing that again the day after. So February 8th, at another day like that, markets went down. Everything, there was blood on the streets. We had a lot of craziness. So coming into Friday, I'm thinking, okay, game on, here we go, because I'm not looking to take very large positions in markets like this. It's not what I do. But I do want to have a little bit of exposure on the table in case the markets come back. So this is kind of a good solution to the predicament with which I'm in. So right shortly after the open, 285 call for April, priced at 55 cents, bought it. Another one lot. So now at this stage, early in the morning, I already have the zero cost basis call spread that I was already in. And now I bought an additional call at the 285 level again. So I'm thinking, okay, let's see if this can happen again. And it darn near did. I'm looking at the 287 call for April, priced at like between 51 and 54 cents. As the market's going lower, the market is going down by the time I'm looking at this. Shortly after I got into that long call, market tanks roughly 20 points, and volatility on that April 287 call is high enough to where I could have gotten into it probably within 10 minutes at 53 or 54 cents. Now, I wanted to hold true to what I was doing. I'm thinking, okay, I'm not going to do this unless it's free, so I still kept my limit order in, and then eventually, same thing happened. The market did rally, and just for me keeping my limit order in, I sold a 287 call. So now, going into the weekend, going at that stage of the day, I actually have a double position in an out-of-the-money call spread that I have a zero basis on. I also wanted to have a little bit of upside exposure in case for some reason the market did another crazy snap to the upside. So at the end of the day, I bought the April 290 calls at 41 cents. That one really didn't become that exciting because then over the weekend, markets didn't really move too much. They did come up. I shouldn't say that. They did come up, and it was ahead for a while. But on the 13th, I decided I wanted to get more delta on the table. And I sold the 290 call for roughly a penny profit at like 42 cents. And I got into the 285 call again for 79 cents. So at this stage on February 13th, I'm long a double position in the 285, 287 call spread with which I have no risk on, or I shouldn't say I have no risk. I have no cost basis on. And then I just bought an out of the money call at the 285 level. So with that, markets have been going up since then, and I'm looking at this and I'm thinking, okay, this is still kind of a low probability trade, and I'm not quite comfortable having that much in a low probability trade, especially when I have some potential juice for free already on the table. So earlier this morning, I decided to sell the 287 call again for 84 cents. So as of right now, what I'm looking at is a triple position in an out-of-the-money call vertical with which I ended up getting a small credit for from legging into spreads. Now, at this stage, what I'm likely going to look at, if we get another dip either tomorrow or next week, I'm probably going to start going out to May to buy some type of a call option. We'll see. I'll make that decision tomorrow should the opportunity present itself. But what's exciting about this is that you have the ability as an option trader, you have the ability to take advantage of other aspects of trading. So, for example, you have 6 different factors of option pricing, and this is an example of where volatility can play a big role in it, to where you not only need to have an understanding of how calls move and puts move in relation to the price of the underlying, but also have an understanding of how things can work when volatility plays a factor into things, which volatility does play a factor into it. So I'm excited to see where this trade is. This is by far the most contracts I've ever had for this from a ratio standpoint to this account. And this could get really exciting here if we do snap back to the all-time highs, which we're only roughly 5% below right now.
I'm absolutely shocked. I don't know who you are, sir. I don't know what you've done, what you've been up to out there. I think you've had a little bit too much Skippy's Gyros and lemonade out there, loading up on all this at the money, or I should say out of the money call premium. Madness, sheer madness, sir. The only thing I could do is mute you so we can take a break from the madness as we keep on rolling. Right on into our next segment. Yeah, it's time for some odd block action.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, welcome to the Odd Block. It's all odd today on the show. We're mixing it all up. Kind of fun. Nice to mix it up a little bit every now. And then the Odd Block, of course, a portion of the show. We break down the weird, the wild, the wondrous, the head-scratching paper that was lighting it up out there in the old markets today. Let's kick things off. Actually, didn't get a chance in the trading block. It is kind of macro madness these days. Everyone's focused on that, but there are still some earnings coming off here, popping off after the bell, including, who do we have today? I think we have CBS after the bell, as well as Shake Shack. Some names you guys may like to trade every now and then. I know Shake Shack was a popular one for a little while there. Blue may have faded off that rose, or we shall see. Shake Shack closing today right around 41 and a quarter. They had a decent move today, up about 4% intraday, so not a bad run for them. They were pricing in right around $4 on that straddle, so right around 10%. And it seems like so far in the after hours, they're up a little bit shy of 1%, so not quite the perhaps the bonanza the premium buyers were pricing in to the old Shack. But again, we shall see. Also looking over at the old Tiffany network, CBS. They own a lot of other things now, but still called that every now and then. They closed today about 56.75 or so, up a little bit shy of $1, about 1.5%. This is the name that was pricing in a little bit over $2, about $2.10 or so on that straddle. So a little bit shy of 4%, about 3.75% or so. And in the after hours, another kind of a meh, up a little bit over 1% in the after hours. So we'll keep an eye on both of these and see if any of these are really catching our eye here. I don't know, Uncle Mike. Any of these lighting up the strategic night, CBS or Shack? Are you blasting away at puts and frustrated you can't get the stock in either of these?
No, but one of these days I would like to try going to a Shake Shack. It sounds kind of good.
Yeah, I've never been to one either. I don't know. I guess I'm missing out on the boat. I've been to Chick-fil-A like once or twice and never been to a Shake Shack. So I'm missing out on all these newfangled fast food restaurants. I'll have to check them out. Not that new, but new around here anyway. So new to us. All right, let's move on. Some of the names that were catching our eye here in the old odd block today. Kick things off as we like to do in the land of the crazy puts, aka the Tesla puts. Were they lighting it up today? Tesla up nearly 12 handles, or nearly 4%. So right around the 330 range. So all of you who were sweating the 300 puts out there, I know there were a few of you, at least, probably more than a few of you who were sweating those over the past week or two. Well, you can take a sigh of relief. Not breaking it, at least not today. So you can take a breath there. Of course, all these crazy puts have been trading it up a lot of late. Today, a little bit quieter as the market was in rally-ho mode. The Jan 2019 50 puts doing just a little bit shy of 100 contracts, back to about 36,000 contracts open. So they've closed about 1,000 of the puts that have been out there since then. So these puts are opening and closing. Someone taking them off the table when things got a little crazy in Tesla over the past week or two. So perhaps it is some short-term paper out there, opening and closing, not taking advantage of the bids and closing things out. It has not just pure aggregation of OI, even though there is indeed quite a lot of that as well out there. And the farther puts, even crazier, shall we say, the Jan 2020 50 puts 5.0, about 60, close to it, 58 trading today. So about 7,500 open out there, which is sizable for such a just, shall we say, ridiculous is a technical term, I believe, strike out there. All right, we'll keep an eye on those as we move on into some of our other names that were lighting it up this week and indeed today here on the old Odd Block. Kicking things off, I believe this may be a newcomer to the Odd Block. This is Community Health Systems, ticker symbol CYH. Closing today about 573, up about nearly a quarter, or a little over 4, about 4.5%. So not a bad day here. This is one of our resident cheapies here. This is the name that does about 1,300 contracts a day, which is not bad for a name that in and of itself, the stock is kind of like an option in and of itself. Today, doing about 10x that, about 13,000 and change here. 41.5 to 1, puts over calls out here. Only 300 and some odd calls trading today. So a lot of this love, pretty much all of this love, listeners. And if you scroll down through the chain, you will see it yourselves. Came in the Jan 2020 3, yes, the 3 puts. A lot of love for these bad boys lighting it up here today, including a big block this morning of about 9,500, gobbling up some for $1.25, lifting. Actually, looks like they're trading through the offer at that point, so could have been a late print on those, but seems aggressive any way you want to put it. A lot more smaller blocks going up after that, all of them similarly aggressively executed, shall we say. So it seems like someone's doing some opening purchases on this strike. Again, the OI about 4,700 or so. So clearly opening however you want to break it down. Let's go out here and check out what's been going on out here in our new friend here, CYH, over the past year. Oh, what a turbulent year they have been. They've had. They started off, about a year ago, right around the 7 handle, and then they spiked up to right around $10 or close to it, and were vacillating around there for a while, got close to 11 at one point back in May or so of last year. And then they've had a bit of a turbulent road ever since. Last couple of earnings sessions clearly not smiling on this name as they've been sent down. They were trading as low as about, looks like they got down to 410. Actually, they broke the 4 handle, 385 back in November. So this thing's actually been on a little bit of an upswing of late, but well off the highs of last year. So perhaps this chart puts into perspective why someone might be concerned about some 3 puts. It is an interesting strike, though. I don't know. Uncle Mike, what are your thoughts here? Here's a name, a $5.73 name. Someone coming in and laying out $1.25 for a 3-handle put in this $5.75 name. So if you do the math, listeners, you're getting protection all the way from $1.75 down. I don't know. Does that float your boat, Uncle Mike?
I can't say that it does, but here's the other side of this. It's typically difficult to I think most brokers even have a rule that you're not allowed to short stocks below $5. So what this may be is someone that is bearish on CYH. And I like that ticker symbol, CYH. Cover your head. Maybe that's what they were thinking when they came up with that ticker symbol. But maybe they do believe that there's going to be a lot of downside with this stock, and they kind of view this as instead of doing, say, a vertical put spread on a stock that's at like the 180 level, $180, and you're doing maybe the 170, 165 bear put spread. Instead of doing that, they're thinking, well, I don't have to sell any premium because I got 0 on my side. So maybe that's kind of how they're looking at it. I'm not sure, but I got to be honest, this is kind of a tough one to stomach. Someone must really believe that this stock's going down in a hurry.
Yeah, I mean that's that's one quote unquote explanation. But yeah, I'd be hard pressed to want to shell out that amount of money for that little. I mean, you're almost getting 1-to-1 at that point amount of protection with how much you're paying. Which at that point, maybe you want to look at alternative strategies for doing something like that. Maybe a vertical, a ratio somewhere from the 5 strike on down, so you can still cover yourself. But I guess if you're that worried about it going that far down, maybe at that point you should take some other steps. Interesting stuff. Speaking of interesting, we got an old friend popping back up on the old odd blocks. Shame Meatball hasn't joined us because this is an old one we talked about back in the primordial ooze days of the option block and indeed the odd block segment. Old friend Radian Group, ticker symbol RDN. Back when they were just, a mere, $6 to $10. They used to pop up on our odd block quite a bit. In fact, Sebastian and I had a field day trading this one for a while. We were selling call spreads and verticals and puts. This one was just super juicy for a long time. And they kind of fell off our radar. Haven't been on our tape here for a while. If you're not familiar with them, this is an insurance holding company that provides mortgage insurance and products and services to the mortgage finance business. They closed today, ticker symbol RDM, by the way, closing today a little bit north of where it used to be, up, so trading about $21.28, down about a little more than 1% today. This is a name that's pretty slight on the options volume side, doing about 500 contracts a day. Today, doing about 10,000, which brings it back on our radar, and pretty much even 1-to-1 because that volume was broke down pretty much almost exactly even, 5,100 calls and about 5,100 puts, which brings us to the trade that drew our attention today, Mr. Uncle Mike. This is an interesting one. I'm not sure if we talked about too many like this before, so put your listening ears on, Uncle Mike. We saw someone coming in today to RDN trading, I suppose, what you can call perhaps time bullish risk reversal. A little bit of that. It was the May 22 calls going up 5,000 times, pretty much straight through the offer and above, because that's how you get 5,000 contracts done in the name that does 500 a day. And doing those for about 95 cents and then turning around and crushing right off the bid, tick off the bid on the 5,000 more of the August 19 puts, doing that for 80 cents. So doing the whole thing 5,000 times net for 15 cents. Let me reiterate that. They sold 5,000 of the August 19 puts, and then they bought 5,000 of the May 22 calls. The stock right around 21 and a quarter or so. So the calls obviously a little bit closer to the fire. They're doing it all for a net outlay of 15 cents. This is interesting for a number of reasons. The structure, relatively unique. We don't see that very often. The way they set it up too, usually when we see this, we typically see the short side much closer to the expiration than the long side. They try to play that theta game. They're doing the opposite here. They moved the long leg closer, the short leg farther out. I think you can probably see why they're trying to line up the premiums a little bit more. And they also want to get a call that's clearly pretty close to the fire here. They're about 75 cents out of the money with this May call. So doing a net outlay of 15 cents to do it. Kind of an interesting setup. Let's look at the chart here, see what RDN's been up to. Not since we last talked about it, because that's been many years, but it's over the past year at least. And let's see, it's had an interesting year for RDN as well, kicking off about a year ago with about 19 and a half, kind of vacillating for a while, getting down to about 16, and then rallying back up very recently in the last month or so, back up to about 23 and a half, now right around 21 and a quarter or so. So it's been an interesting range. Uncle Mike, seems like someone... by the way, OI on both of these strikes is non-existent, as you might imagine, so clearly opening on both. Oh, Uncle Mike, what do you think about this trade? You like this kind of longer-term short put to finance? I wouldn't say nearer term, but closer. It's May. Near at the money call. Maybe this can be your new technique for all your out of the money call buying.
Why not? It seems like whenever I don't like a strategy, I end up doing it a little bit later. No, I really don't like this one. Unless the trader is seeing something along the lines of, say, he believes there's going to be a short-term pop in the underlying, and then maybe if there's a short-term pop, he can roll the call out or something. But right here, unless there's more than meets the eye, I can't say I'm a fan of this.
Yeah, when your sole motivation on something like this is to make the kind of the premiums line up, then there's probably better ways to structure it. And that's why we don't see a lot of this. People like to do it the other way to maximize the theta, which this trade clearly is not doing. It gets points for weirdness, if for nothing else. And good to see our old friend Radian back on the old odd block as well. Brings a smile warms the old cockles back to the old days when we were slinging and having a lot of fun on good old Radian. Speaking of fun, it's time for you guys to join us on the old endless fun party that is the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. It is indeed the portion of the show where you guys take the reins. You guys have been lighting us up as you might expect here this week, so we'll see how many we can get to on the old show. Let's kick things off as we want to do, turn the tables, asking you guys some questions. We asked you at the beginning of the week. You know, it's been, I think, it's fair to say a rough week, a tumultuous week for the markets, a rocky week, however you want to put it. People understandably scared, maybe a little bit confused, which raises the question, which product gives you the most heebie-jeebies over the next 30 days? So which product, if you had to, would you not touch with the 10-foot pole? I gave you four choices. The good old friend, the VIX. Our other good old friend, SVXY. Uncle Mike's favorite, SPY. Or everyone's favorite until at least the end of last year, Bitcoin. Uncle Mike, we'll start with you. Excuse me. What is your vote? Has it changed since Monday? And more importantly, what do you think our hardcores, our crazies out there are voting for?
The one that gives me the most heebie-jeebies is Bitcoin, and I believe that Bitcoin is also going to be the audience choice. I think that with anything that starts at 15,000 back in December when it opens up for trading and has had a range from 5,800, I believe it was, up to 20,000, and it's trading at roughly half of what it started at. If that doesn't give you the heebie-jeebies, I don't know what will.
Yeah, that certainly would give me the heebie-jeebies. Our audience agrees with you, Uncle Mike, with about a couple of days left in here in our question of the week. So if you haven't voted yet, a lot of you have. If you haven't voted yet, get on over at Options. Make your voice heard. 45% so far agreeing with you, saying Bitcoin in all of its forms, whether it's over there on Coinbase or if it's on the XBT or the Bitcoin, whatever product you're looking at, Bitcoin in all of its forms, giving you the heebie-jeebies, followed by 28% saying the VIX. I understand. It's been crazy out there in VIX land, too. 19% saying SVXY. Certainly understand that one. 8% saying SPY. So not a lot of people scared in the bearish direction for the S&P, Uncle Mike. I guess that's good for all your dripping loads of out-of-the-money call premium that you're loading up on these days. Can't get enough. Degenerate call buyer that you are. All right. Speaking of call buyers, we got more from your friend here, Uncle Mike, on these Facebook calls. What's the name? Matt Williamson. He wrote in last week talking up his own position, I guess, because he wrote into us saying, hey, what's the deal? It's kind of like a Seinfeld skit. What's the deal with all these Facebook $5 calls? And so we talked about it a lot. I had some fun with it last week, speculating on why. I mean, I looked around. I didn't see a lot of paper that would indicate the usual suspects, like a box or things like that. It seemed like it was just a call paper. So he speculated on what that might be. Maybe it's some sort of carry play. Maybe Uncle Mike thought it might have been some sort of short sale type runaround on a stock premium. He followed up and he said I think on our last show that he was doing, I don't know if I have full response from him. He said he disclosed that he actually was trading them himself, so he was talking up his own book. And he said, but why? He said, I was actually the closest with my box theory, but which is weird because it's not technically a box because, box has to have multiple legs, which, he wrote in and said he followed up again, said we had a good guesses and discussion on the last show. His actual theory is much simpler. It's $5 covered calls trading for $4.30. How he says he buys the $5 put and arbs it for 15% ROI. He said he bought some 15s, some 20s, and some 5s. I guess no one is concerned about 97% correction over next year. He must have done that afterwards. When I looked, I didn't see any paper on the put strikes that would indicate some sort of box or carry trade like that. So it sounds like Uncle Mike, at the end of the day, he's doing pretty much shall we say, a deep in the money conversion reversal, which he says is going to be 15% ROI after he carries the whole thing to completion for a year. Does that float your boat, sir?
I'm not seeing where he's getting the 15% ROI on it, but you never know. I guess, yeah, because if it's okay, it's interesting to say the least. And now that I see what he's actually doing, I'm going to look at it and see what it actually is. Things like that are unique with how they're set up. So I'll take a look.
You do that, sir. Well, I keep on going with, I didn't have a chance. That 15% left off in me a little bit. That seems interesting. But I'll have to crunch the numbers after the show and see what he's up. I'll have to look at some of those other strikes again to see if he was putting on stuff there, because when I first looked, again, it was just a call. So there you go. At least the mystery in one of these weird strikes is perhaps solved. Still don't know what's up with those Tesla puts, but we have our theories on those as well. Let's see. J3 Dingle writing in. I believe he wrote in before suggesting the theme song for Sebastian on the Volatility Views show, which we'll have to get to one of these days. He really wants his own theme music. But if he keeps missing the show, he gets no theme music. Haha, there you go. We'll turn the tables on him. But J3 Dingle saying, hi, Mark. Well, hello, J3 Dingle. He says, in yesterday's option block, so he's talking about Monday's show, I believe, you said you personally took an options position in SVXY. I was curious if you could say what kind of position a pro takes. Thanks, J3 Dingle. J3 Dingle. We were talking about this on the show on Monday. Started last week. We were just everyone was looking at these inverse vol products. Obviously, they were very much in the microscope after the whole meltdown. XIV, of course, having their quote-unquote acceleration event. Everyone was then focused on SVXY, and I came on the show and said, personally, I wouldn't, in terms of net holding the underlying, I wouldn't touch SVXY with a 10-foot pole because there are still so many other shoes to drop that we don't know for sure what could go on with that. There's regulatory issues still lurking out there, other things that could potentially really crush this product. So if I did buy the underlying, I'd hedge it so tightly it wouldn't make sense. I might as well buy the calls. So that's the only thing I would consider probably doing. It's certainly much more capital efficient. But nothing really motivated me. I kept an eye on it for a while. I knew the froth was getting out there for a while. But I did keep an eye on the options volume that was going up in SVXY last week. And if you noticed, right after the meltdown, and the day once everyone was to breathe a sigh of relief and realize that it wasn't going the way of the dodo, SVXY was actually going to survive, we started to see a flurry in the couple of sessions following that and throughout the rest of the week of just a lot of call paper, upside call paper, coming in day after day, specking on an aggressive rebound in SVXY. And I knew that's going to take a while for that to happen. Can't really happen next week, like maybe some people were thinking. People were piling it to near-term calls. But a lot of it seemed like the more level-headed, shall we say, paper was piling a little bit farther out. And nothing really interested me I saw there. I just kept going up. I did see a lot of paper starting to pile in, probably, I'd say maybe 2 or 3 days after the big meltdown, starting to pile into April calls, which seems kind of interesting to me. I was looking at that time frame. Seemed interesting. Again, this needs a lot of things to happen for it to pay off. Of course, SVXY has to survive. We need that VIX futures curve, which was heavily backward at the time, as I mentioned at the top of the show, finally starting to drift into contango. We need that to happen pretty firmly for SVXY to really get any aggressive lift in the near term. But I noticed one of these days when I was looking at it, a pretty sizable bid sitting out there, and I believe it was the April 30s for lots, many thousands, tens of thousands for a dime. It seemed like an odd bid, an odd strike. Didn't really float my boat, but I made a note of it. I like to see those kind of things out there when we do the odd block and things, because once you see these size orders out there, you can maybe trade around them if you like. That's what we like to do with the odd block a lot, is, we talk about these discrepancies out there so you guys can take advantage of them in your own trading. So I kept it in the back of my mind. I noticed it stayed there for the rest of the day, and I started thinking, I don't like that 30 strike. That seems like a bridge too far for April expiration, which was about 60 days away at the time. But I started thinking, if I can get a more reasonable strike in April, it might be kind of fun to lean on that April 30 bid and leg into some verticals for ridiculously cheap prices and take a very cheap flyer. Again, this is all speculative money. This is not your kid going to college money. This is not, your house mortgage payment. This is pure speculative. SVXY could go away tomorrow. So you got to keep that in mind and keep any exposure to a minimum out here. So I was looking at things that were kind of cheap, fun lottery ticket flyers out here. And so I said, you know what? That size bid is working in the 30s. why don't I try to work a ridiculous bid in a more reasonable strike? Let's say maybe around the 20 handle, which has a chance of happening by April, but it's not the end of the world. Then if I get filled, if I decide I want to keep it, or I could turn around and leg into a vertical, hit that bid on the 30s, and leg into it. So I ended up getting filled on my 20s, which surprised me. I think it was somewhere around a very cheap bid, somewhere around 15 cents. So I ended up taking a bunch of them and legging into a vertical for effectively nothing, for a few cents. So it's kind of a fun, silly flyer out there, 10-point vertical in April in SVXY for absolutely almost nothing. And that's pretty much the only way I would play this thing. And those have moved around quite a bit since then. The call wing's been all over the place. It's got bid up. They've doubled. They've been crushed. I think probably now you might be able to go in and buy some of those 20s outright for maybe around that price, which if that interests you, maybe that's something you want to look at. But that's kind of what I did. I wanted to take a nice fun flyer, nothing that was too big, too crazy, too much risk capital. It was more just a fun flyer trade to see what's going on. And SVXY, as we've seen, has been trending up as that backwardation curve has slowly started to ease in the VIX future. So there are some interesting trades out there. These calls are starting to get some life. But yeah, that's kind of what I did. Just, again, taking advantage of the big orders that were out there to lean on them and trade around them and put on a fun flyer for next to nothing, which is kind of the only way really I would touch SVXY right now. I don't know, Uncle Mike, you're not big on the inverse vol products, but how does this one float your boat at all? A little flyer in SVXY?
It's interesting in terms of how you set it up because it's a small amount of risk, but this really could become a lot of a pretty nice little profit. It actually kind of reminds me of the stuff I'm doing in SPY, quite honestly, the way you described it.
Yeah, and I like to play around. When those big resting orders are sitting there in the book, listeners, and you can lean on them a little bit, it opens up some opportunities. I probably wouldn't come out and just sling a lot of these calls naked on the 20s, but if I have something else I can lean on, I could trade around a little bit. It makes it a little bit more fun. And you can get in for not much. So it's a good way if you want to play SVXY in terms of flyers. Again, touching the underlying, probably wouldn't do that. I have to hedge it really tightly. So you're talking a lot of capital. You're buying stock, you're buying puts, or ETF in this case, and puts. You might as well buy the calls, in which case you play some verticals and things like that. I would definitely want to come in and aggressively naked short any units in terms of short out here, because we all see what kind of marks that could leave in your portfolio. All right. Let's see. Got a bunch here coming in there. Probably good for vol views as well. We got so many to go through here. Let's see. This comes from Scott Somer. He's written it a bunch of times. He says, I think this was maybe beginning of the week or late last week. I forgot when he sent this in. He said, another day, and another day with a very large sell-off heading into the start of the option block and an up move in the S&P futures during the trading block. And he put hashtag option block. And then he put, oh, by the way, if we get a Rule 80B sell-off, that will finish SVXY unless the second month VIX futures are north of 40. Excuse me. Yeah, a massive sell-off that spiked the futures again. That would probably, I don't know if it would finish SVXY because we're already in a structure where, well, now they can move up a little bit more. For a while there, the futures were so backward that they were kind of limited in how much, obviously they can go to infinity, but realistically, practically, the amount of damage that they could do in terms of jacking up again. They're not going to have another 80% update when they were already so elevated right there. Well, probably not. I should never say never. So they were kind of limited in that sense, but I hear you. If there's another massive sell-off that spikes vol aggressively, it certainly would not be a good day for SVXY. I'll probably be happy I only outlaid what I did on those calls and didn't go whole hog on something crazier like buying the underlying or something like that. What else we got here? Mr. Magoo, I like his handles, saying, there are no regulators working under Trump. It's a free-for-all with the HFTs eating retailers for lunch. Okay. I don't know. I'm not sure where you're coming from on this one, but maybe probably a little angry after last week's activity. Certainly, I can understand maybe you've been upset, shall we say, about that one. So I feel your pain if you are indeed angry. There are regulators. They're trying to work. Some of them doing better jobs than others. Some of the ones you may have been seeing getting quoted a lot in the media of late. Maybe they should take a step back on some of the things they've been saying. But other than that, things are interesting out there. What else we got here? This one came, I think, a while back from Jeffrey Arzit. He's saying, talking about the SVXY did survive, but the price initially was going to be unknown. XIV not so lucky, going to be liquidated on the 20th. Yep, we know that. And he says, sick. He follows up with sick. They destroyed everyone in one day, and within days want to do it again with another one. Yeah, that a lot of people have that feeling there, Jeffrey, that these inverse vol ETPs, you can't really call them ETFs because they run the gamut. These inverse vol ETPs, even though they did disclose what they were up to, they did take a lot of people for a very interesting ride, and maybe there should have been some more barriers for people actually trading these things, whether it's on the brokerage side or the disclosure side or what it might be. And it will be interesting to see if Credit Suisse, I don't know if they've announced it yet, because the plans, people probably expect them to do it again, certainly, but we are in a different environment now, regulatory and otherwise, and I think there might be a little bit more heat on them launching XIV version 2, whatever flavor or whatever name it has. And so they may want to hold off on that just from the PR standpoint of that for a while. I wouldn't be surprised if they wait. Even though everyone expects them to fully do that, they may indeed want to hold off on that lest the regulatory stick comes smacking down harder than perhaps they expected. Mr. Uncle Mike, what are your thoughts here on what he says? This is kind of echoing what you were saying, I think, on the show last week about some of these inverse products maybe shouldn't have seen the light of day, you thought, or perhaps should have been disclaimed more. And certainly people who were trading them, maybe a lot of them shouldn't have been trading what they were doing.
Well, I think that I was just talking with one of my clients today who's a doctor, and I was saying, well, there's a reason that I'm personally not allowed to prescribe OxyContin to anybody, and that's that I'm not a doctor. I don't know what the heck I'm doing with something like that. So I think that with these products, you can argue, well, only professionals should use them, but the reality is that there was a lot of professionals in XIV when it actually happened. So you're playing with fire. I personally, I think I even said on the show the other day, I've spoken out against a lot of the inverse products from the time that they came out. I've bashed UNG on this show numerous times. I know that I've bashed USO on this show numerous times. And with the vol products, if you're not trying, I really see no reason to touch them unless you're trying to do like what Andrew and Mark do and try to take advantage of the inefficiencies within the product and trying to trade that. That's one thing. I'm okay with that if you really know what you're.
Well, looks like the Skype gods are not smiling on Uncle Mike, sir. We'll get him back in a second. But, yeah, it has been interesting to see what's been going on. Oh, what is that? Do I hear a cacophonous, tinny voice? Could we be joined in the last 5 minutes of the show by the Greasy Meatball? Are you there, sir?
Yes, I'm here. Hooray!
Well, since you're here, we got a few minutes left before we got to wrap up. Quickly, regale us. What's been catching your eye in the market, sir?
Well, today was XIV's last trading day. So we saw some funkiness in the VIX, some funkiness in VIX term structure. We saw a crazy move in the S&P on Wednesday that was pretty nutty, and I liken it to Mark. You're a big fan of horror movies, right? What's your favorite horror movie?
I like some horror.
Scream?
Old school gothic horror is kind of my favorite, but they teach their own. Not a slasher guy.
So you're
really.
a big Svengali fan, right? You love
like old Wolfman. That's my cup of tea.
Okay, so in like Scream when they like do like the camera sneaking up on Whitney from.
I'm disturbed by whatever analogy you're about to make, but go for it.
Yeah, but like when it sneaks up and then you hear the music start to creep up, then there's and instead of being the murderer, it's like her friend or her dad or her boyfriend.
Yeah, the jump
or something
scares,
like that.
yes.
Yeah, yes, exactly. That's kind of what markets did yesterday, and then we just kind of continued that pattern today. So, it looked like we were really scared about inflation. Then everyone went, "Wait, don't we want inflation?" Oh yeah, we do. All right, well, buy SPUs, and that's what happened.
Yeah, it kind of was. Along those lines. Well, you're joining us just in time, really, to head into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. That loud transition means it's time for the final segment of the show. Our earnings friends, we checked in at the top of the show, not really doing a heck of a lot. Actually, looks like Shake Shack selling off a little bit now, selling off about 2%. So a little bit of a change for them there, and CBS kind of unched. Let's go back to the Meatball. Mr. Meatball, what are you keeping an eye on? A lot of things to watch this week. What's on your radar for the rest of the week?
You know, I think you got to just stay with the bond market. And then I'm going to be watching to see how VIX runs. So we closed the day just above the 200-day moving average today. Question is, are we going to be able to hold it? Are we going to fall back below the 200-day moving average? That's as technical as you'll ever hear me talk about.
I was going to say, are you talking VIX technicals to me right now? Is that what you're saying?
No, I'm talking S&P technicals, not VIX technicals.
I was going to say, I was about to hang up on you.
Yeah. No. S&P technicals. So the S&P closed about 3 points above its 200-day moving average. So the question is, will that hold? And, you know, it might, but I wouldn't be surprised if we got a little soft tomorrow. We've had quite the run. You know, this is the best 5-day stretch since President Trump got elected. So it's been a run. And so it'll be interesting to see how things move. And that's going to be kind of what I'm watching is, you know, do we get the breather tomorrow or do we get another buy ski with a VIX dump ski? And I wouldn't be surprised tomorrow with XIV coming off if we saw VIX down and the S&P off a little bit. You know, there was some call buying that was reaching today that was pulling up curvature. I know if only we knew somebody that knew skew that could talk about, S&P curvature. And, that would be helpful.
I don't know. I'll see if I can find anyone like that. In the meantime, let's toss it to Uncle Mike and see what's catching his eye this week, sir.
Of course. We gotta love that skew. To add to what Mark said, the other thing that was, I think, kind of important today is that we're within 5% of the all-time highs that we hit on January 26th again. So curious to see if we can hold the 5% mark from the all-time high if it does go down, along with us being above the 200-day moving average as market added. So I think we have a lot of key numbers here, and we're going to see if we can make another run at the all-time highs.
All right, listeners. That music means we've survived to the end of another epic option block journey. Oh, what a fun one it was. Talking about an early strategy block, kind of fun, mixing it up, talking about all sorts of fun stuff. Don't worry if you want us to talk more about all things VIX, XIV, SVXY, all the fun stuff that's been going on in that complex. Got a whole show about that tomorrow called Volatility Views. So tune in to that one, noon Central, 1 p.m. Eastern, or check it out wherever you find our fine podcast programs, because it'll be there post-haste, I should say, as well. So join us there. But before we go, one last time around the horn really quickly, let's start with Uncle Mike. Uncle Mike, if I'm intrigued by all this skew slinging stuff, but I don't want to do it myself. I want someone else to do it for me. Who should I talk to?
By all means, talk to me, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
All right, and Mr. Meatball, if I want to, let's say, ask you questions about, maybe why you missed 55 minutes of a show, or fun stuff like that, where should I go? What should I do?
You go to optionpit.com, and we just implemented our brand new members area yesterday. So now's the time to join Option Pit. You can go to our blog to read things and to check everything out. My next big webinar is going to be March 2nd. So be on the lookout for that. And
look at the site now. It looks nice. I'm missing the old guy who used to be there though. The intro. What happened to him?
I know.
He was my favorite.
You miss him. He'll be back. He'll be back.
Head on over to optionpit.com. See if they bring that guy back to do your little intro for you. That was always my favorite part. All right. And on behalf of the Meatball and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, sending in so many questions. You guys have flooded us. A lot of them on Vol and XIV and stuff, so we'll get to a lot of those, of course, tomorrow on Vol View. So join us then, noon Central, 1 p.m. Eastern. Then stay tuned for TWIFO immediately after, about 1:30 p.m. Central, 2:30 p.m. Eastern. We'll get into all this good stuff and a lot more. And we'll see you next time, otherwise, for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.